This is the performance summary for the weekly reversion strategy for the week ending July 18th. Let's begin by inputting the balances. So the starting balance was on July 11th. And the ending balance was on July 18th. So I lost a little bit last week, down $271, which is a percentage loss of negative 0.9%. And these were the 5 trades that we did over the week. And they were all weighted at 20% each. First one was Cisco, where the stock was up 32 basis points over the week. And this is how the trade looked. So the strategy is a dip buying one. So it looked at this dip here and bought here on Monday and sold here on the Friday for a small gain. And over the long term, this is the chart of Cisco. It's going back to 1990. Okay. The next one is Gilead, GILD. That one was down 1.32% over the course of the week. And the chart is here. And so this is the dip that it picked up on and got in here and got out here. The stock never bounced up over the week. And over the long term, this is how Gilead looks. This one's going back to 1992. Third trade was IBM. That was the best trade of the week. It was up 1.07%. And so here's the dip and here's the trade. And over the long term, this is IBM. Since about the COVID year, 2020, IBM's been really on fire. As you can see, after several years of not doing a whole lot, it came back to life and it's doing pretty well in the past few years. Next one is Meta. There we lost, it was down 1.86% over the week. And so it picked up on this dip here and bought here and sold here for a loss. And Meta over the long term, going back to 2012. And the last trade was Netflix. That was the worst trade of the week. It was down 2.87%. So it picked up on this dip in prior weeks and bought here on the Monday. And on Thursday, there was a earnings announcement. And so it sold off pretty much after that. And so we got out here. Now let's input the ending balance into the cumulative tab. And this is how the equity curve looks. The thin gray line is the actual equity, accumulated profit in the account since going live in June of 2024. And the yellow line represents the current rule set, had we been trading that since June 2024. Okay, and let's also look at the equity curve and performance over the long term. This is the back test of weekly reversion going back to 1994. And over that long time frame, the strategy has an expected annualized compounded growth rate of 19.8%. And that's in comparison to 8.6% for the S&P benchmark, S&P 500. And year to date, or month to date, the strategy is down 0.8%, which puts it at plus 13.2% year to date so far. And this is how the equity curve looks, back tested to 1994. Purple line is weekly reversion. Gray line is the S&P 500 buy and hold benchmark. So if you're interested in learning more about weekly reversion, or you want to subscribe to my weekly signals, please visit my website at returnstream.com. Link is below. Thank you.